Hey guys, again, another video today. Fantastic. We had 33 degrees today, which is very warm in Danish standards. I know some of my friends in Croatia and also in the London, Burak, he had like 40 degrees or something like that. So I can't complain. And right now it's thundering quite heavily. Well, not heavily, but we're getting some rain, and that is good. And that's why it's so cozy to do videos and charts for you. So yeah, this video here, by the way, just released two videos. One is on the Drive DRIV ETF. I think looks good here. And then a walkthrough of the platinum space. Rhodium, platinum, palladium, the metals, and then all the miners that we look at. And still, we did some great calls 6 weeks ago, and they are still valid. They have run very far, and we are in a stage two bull market of that, so don't overthink it. Check out the video. This video, I will go through I will go through the big calls in gold and silver miners lately over the past maybe 1 year, half a year, just to see where we are, where we stand. And when I say big calls, it's because it's the setups where I'm like, hey, this one is a big one. This one is a really, really strong setup, long-term, mid-term, massive breakout. This is where you can do large positions and feel quite comfortable, with the direction and the odds of going up. Again, risk reward wise is good. Big-ish companies, all that good stuff. So let's go into them. This one here, again, is uranium. It's not part of that video. I want you to see that if you don't see it in the video. Anything north of roughly 7.5 cents, and we break a 4-year downtrend in GUE. Small, small, small uranium stock, small position again, but it could do wonders. Just gonna quickly show you that one, and then we delete that entire video. Good. AG, AG. I'm a big fan of AG. I have my entire position basically from that point there, right? Roughly 28 cents. Um, Loaded up quite heavily there. And initially, 28 cents to 43 cents with a blink of an eye. And then we gave it all back. And that sucks. It always sucks to give it all back. But from a charting point of view, it's still healthy. It's still, wouldn't say healthy, but it's still normal to backtest it in this case 2 times. And we held the blue neckline, and now we again, of course, went heavily, major flag there, breaking out here in June, breakout back test within a bull flag, breaking out today. It looks really, really, really good. And the big, let's say the monster breakout, it sounds so, woo. But again, if we tack here roughly 83 cents, which is the upper, excuse me, again, I've gotten a 20-inch, 27-inch screen, and it's very difficult because I've only been using 24 inches my entire life, and the resolution is so big. So again, I'm a bit, yeah, um, $0.83, 83 cents is my target now. If we tag that and break through, that's a buy, of course. If we tag that, we pull back and we break through, that is a buy, of course. Big macro breakout is happening on that upper yellow. And then we will most likely see the real deal from Aftermath. And with an entry down here, and the fun stuff happens, 4x higher or 3x higher. Beautiful entry. It looks fantastic across the board. We can zoom in here on the daily stuff. You can see again, we call the breakout here. It's pretty standard backtest of an important channel, bull flagging as well. Textbook, beautiful. It is, everything is in control. We don't see anything that we, at least not for now, where I didn't expect that to come. So right now we are definitely breaking out there. Flag breakout. We can do the initial measure from that one, which is somewhere again measuring from the lows, roughly 1 here, measuring from the breakout point, roughly 1.2. We will probably find a high somewhere around there, and then we could backtest again, right? So we can go to 1.2, and then we could, drop 50%. Ouch. And again, that is totally according to plan. If we get the backtest, of course. Often we do, not always. So yeah, AAG looks really good. I will say the good thing about Aftermath is they are heavily leveraged to the silver, and it's only 200 million. So this is where again we can get the 10 bagger stuff, especially with that entry, by the way. Good. Abracadabra. Also, big call made 1 year ago. Big call. And it took some time to really get going, right? Yay. No. Yay. Boom. And then boom, finally. $2-ish was the entry. We blasted through the all-time high, triangle high here. Technically, it's not triangle high, actually. The triangle high is here. Makes sense, right? This is the T high. And you can see we did try a few times. And fresh highs, I'm not touching it, right? I'm really not touching it. Because again, mega uptrend on the daily. I would assume mega uptrend on the monthly. So what happens, weekly or even daily or even weekly, I don't care. So this one we will let run, and hopefully, again, if we're lucky, we could see 40, 42 up here if we're lucky. I'm not saying it's gonna reach that high. That is the max greed target. And that is when I say max greed, that is a place if we get to there, that is a really good place to take the entire position off as a default, right? There might be excuses why not to, but as a default, that's a really good place to say thank you. If it's been fun, let's find something new and enjoy whatever gains we have had. Um, Again, we are only at 5 now, so I'm not going to sit here, hey, we're going to go to 42 in 2 years. But yeah, I think you know what I'm trying to say. Um, Avino Silver Mines, yeah, massive breakout, to say the least. 20 years breaking out here, and we're seeing a little bit of stall here after a massive run, basically. And do we backtest this one here at roughly 3.7? Most likely. If we do, that is a buying opportunity. You're backtesting a 20-year breakout, right? And you can have your stop below. So again, you're going long at 3.7. You can have a stop 3.3, maybe a bit lower, depending on how much risk you want to. But for now, it looks quite promising here. We might not get the backtest because this is a bull flag. If it breaks higher, yeah, cool. But yeah, we're long. And the initial entry, right, was down here. So Avino Silver Mines, what a beauty. AU was one with a beautiful setup. It has actually disappointed me quite big, to be honest, because the setup was great. Um, and you can see we bought it here at the break of 66 cents, give or take. And yes, we are up 10%. But after, 3, 4 months with a monster setup, it could be way better, right? So what I'm looking at now is this channel here should and hopefully be the breakout here, and then you go again, right? And when we break the yellow here, which is the bit of a bearish channel, when that breaks to the upside, and of course also the golden here, then it's a total other demon, and then we will definitely have momentum. But for reasons, it has broken out, but momentum wise, looking at, for instance, what is it, not Abra, but Santa Cruz, SUP, these guys, they have had boom, initial massive momentum. It's still good. I'm not changing anything, but I'm really watching that trend line there. Um, yeah, I will let you know. Defiance, small guy as well, 100 million initial entry. Again, this is also one of the good ones here. That one right there, 13 cents we went long. The reason is we have a big uptrend here. Not big uptrend, but definitely an uptrend for sure, long term. Ping pong. So that is our thesis, right? So once we broke here, we said the max greed target is roughly $2. Again, if we get to $2, as a default, you sell it all. As a default. There might be excuses not to when you get to there, depending on what structure we have. But as a default, it's like, thank you and goodbye. And you can see here initially, and again, it also illustrates how important it is to get the entry right. And I say that over and over again because I really mean this. And that's something that has helped me to actually really try to nail the entry. Because if you get the entry right, it's so much easier. Everything is so easy. Initially, we pumped in 2 months 300%, and I had a big position on there. 300. Everything was, golden blue. And then we pulled back, basically gave it all back. 67% down all of a sudden. I know we're still up, roughly 40%. It's not bad, but to go from here to there, again, the entry is so important. And ever since we have been making this kind of flag here. So 1, 2, 3. If we can break here roughly 30 cents, then we trigger measured move somewhere of 1.5, overshoot $2. Thank you, we're out. So it's still looking good. It is heavily consolidating for over a year. But again, overall looking at it, just straight off the bat here, massive surge, flag, cool. It's not, again, sometimes it's very simple to actually just look at it at 5 seconds, every week. Are we still okay with what we see? Yeah, cool. Then we don't do anything. Of course, we want this to break as soon as possible, but it's still fine. And cool. Equity here. Equity has been a bit of a teasing boy. Really, just like the CVV, the Can Alaska one. It's CVV, right? CCV? No, it's CVV. Anyway, um, that has been teasing us big time, basically doing nothing for the better part of a year. Still looking good, but again, it just won't get that momentum. And again, I don't do any fundamentals, any analysis on that part, but maybe there is some sort of what's it called? They have options or something like that, at this level here, roughly 80, 90 cents. Could be. I don't know. Equity here also looks really good, and we called the long there. We said this is a big one. It's a massive one. We are breaking that ceiling there. And the reason is also you have grade A price action leading up to that moment. And as you can see, we're not correct all the time. This was and is a small stock. So we said we're gonna buy here a tiny position and leave it. Because with the small guys, if I can get a good entry, I'm writing that check and saying, that's it, it's gone. Maybe that's incorrect, I don't know. But with the small players and using small size, to me, that is no more anything that I can sell and not as a default. So, but now here we have, again, you can see the wedge that has formed ever since. And you can see that one there, right? And then it should break out. It should break out, just like Can Alaska. It should really do it now. I mean, that one, man, I'm gonna have nightmares of the Can Alaska. Hopefully soon, dreaming of it because finally it lets go. But anything north here of roughly 30, what is that? 38, excuse me, 28 cents, 30 cents, go time. And we target quite simply the overall yellow here. We target roughly 2.4, right? 2.4. You can also see here horizontally, big level at roughly 33 cents. Right. It's still looking good. And if you haven't got a position, I will definitely think, buying 33 cents, give or take, is, excuse me, not 33, 28 to 29 cents is a good option. And I'm adding more. I'm adding one extra lot into that one. Again, it's tiny compared to my overall portfolio. But yeah, I have that rule with small players in commodities and in mining, first of all. I don't want to. Again, I hate dilution. That's a huge spread. Sometimes you don't have any liquidity. So if one big player want to sell, the price tanks 30%. There's a lot of big risk coming, and that's all we try to manage. That is risk. Here we have MGG, which is not a great A setup like some of the things we're looking at, but again, we called along here. I think we actually had two goes, if I remember correctly. One here and one there. And this was, yes, good. And then we're doing nothing. But finally now we were breaking out and we were flagging as we speak here on the lower time frame. Uh, Again, we should see this one go to the upside. Um, but sometimes you get the break and then you lose all momentum, just like the MKO, they're losing a lot of momentum for whatever reason. And this one here definitely needed 1 year of recharging, but I think we're finally good to go. And I think, roughly when we break 27 cents, yeah, 27, then we're breaking the bull flag here at the end and getting back above there. So that's when we should start to slowly but surely go higher on MKO. Excuse me, on MGG, my bad. MKO was also one of the better ones that we've called, and that is, you can see here we had a little bit of a fakie going on there, but also a bull flag at the end. And overall, I think if you want to study what I call like a macro wedge, this is one to do it because we have everything that we need in order to frame the entry. And that is the first initial impulse, massive surge, holy bananas, right? From basically 10 cents to $40, $14, massive. And then, of course, we were puking down to 50 cents again. But you can see here the macro wedge. Again, we don't know at this time how it's going to look. And even here, you don't know how it's going to look. But all of a sudden, you start to see, okay, there it is. And then you see if we tag it here, like I'm usually saying, if we tag here, we pull back and then you break, that's your entry. And that is when you go very long with a big size. We bought it there 3.7, and our first target is the midpoint, 5.4. The uptrend is fully intact, 30 weekly is fully intact, looks good, looks really good. Next target is, again, it's not because we only have that midpoint, it's also because over here, this was the big bear breakdown. That is why that level, 5.4, is really a big one. If we break here, we go to roughly 8 point, maybe 9, depending on how we get there, the upper yellow, and then, of course, all-time highs. And then we can start to do measures, right? So you can see here the 100% momentum measured move from the lows takes us to 67. It's basically like a Fibonacci extension, right? Like that. So again, you can see I've done it not perfectly there, but again, you get the idea, roughly, $70 there on the momentum measure. Again, a good one, a 15-year wedge flanking at the end there, beautiful. If you get those, perfect, because then your risk is so capped. It's so nice, and then you go. Again, we could have easily have done that, by the way. Remember that. We could easily have done that. RDS, RDS is actually a very messy chart. However, we had initially, I just want to remove it here. I'm sorry for this video for being so long, but I really like to explain my thoughts and where we are. Am I still bullish? And I can say all these stocks here that has been breaking out, we're still bullish. This one here, even though the setup of the chart was really messy, was actually that beauty of a trend line. One trend line. That was all I had at that point in time, basically. And that's not true because I had the lower one as well. So this was what I had. Again, you can go back and check videos on it. This is what I had at the moment. And we said 20 cents and you have a banger entry. And you can see initially we popped, oh yes, 70% up in a month. And then you're getting smoked, boom, down 36. Again, and yes, I will say this more times than this, the entry is so important. And that's why you have your limit orders in at the level where you think that's the time to get in. And for us, it was 20 cents. Limit orders in, you can play stop loss as well, below the wedge here in this case, and you're good to go. Then you have capped your risk, basically. Later on, I discovered something, I don't know. But here we have a trend line going across here. We make it a little bit thicker so you can see that. So you can see we have big connections at this trend line going forward, right? And we were breaking out now. We actually back testing this one here. You can see that breakout back test. And when we get above, in this case, a 20-year trend line as well, I mean, it's basically, that's really good price action. Anytime you break a 20-year trend line almost horizontally, that is almost always a buy as well. So yeah, RDS looks good. Let's see how it does here at, the retest and the breakout situation, but still happy. Santa Cruz, also a good one. Looks very similar to the AU actually, and you can see the difference here where Santa Cruz, a ton of momentum, looks, I mean, incredible on all cylinders, whereas AU, it did initially, and now we've given a lot of it back. So momentum-wise, a totally different breakout, but similar pattern. And we called it there roughly 44. That is your long go, all the way down there, right? All the way down. So breaking out, cool, tagging the golden here, pull back to that breakout level right here. And it undershot a little bit, but that was during Trump, I think. Yeah, Trump, tariff height within the news. And then boom, we're ready to go. Absolutely gorgeous. And what is also gorgeous is you can measure this head here, and you can actually add left shoulder, head, you can add the right shoulder, and there you have it. Excuse me, there you have it. Breaking here, the roughly 60 cents actually triggered a major neckline. A major, major neckline. And we can add the measured move on top. I mean, it's a beauty. Technically, almost perfection, according to how I do things. And this is my max greed target. And that is 7.3. So when and if we get to 7.3, I will most likely not have the position in Santa Cruz. And I will be very, very happy with that exit. Again, as a default. You can see the entry wise was down here. You're getting to 7.3. That's 16x. Will we get there? I do not know. But if we do, I have a plan. Right? When this happens, then you do that. So like an when if statement, if that is the correct terminology. Looks fantastic still here. Short term, massive surge, teeny weeny flag here. I have my doubts that this is, again, you do the measure and then you go. But for now, we take it. It looks a little bit too tiny given the breakout. Anyways, we'll take it if that's the case. Meaning we measure from, I would do the low. Do we do it from here? I do it from here. There it is. Something like that. We go to 2.5, give or take, from that breakout now. Basically, the blue here, 2 to 2.5 with overperformance. Santa Cruz, yep, looks good. SUP, also one chart where I was saying you have to buy this heavily. Well, you don't have to, but I really recommend you buying SUP big time. And this one here was actually discovered by a subscriber from the Substack. Meaning we have these weekly chart requests where people can, write their ticker, and then we go through it. And immediately when I added it, I looked at it, I'm like, holy smokes, this is a big one. And straight off the bat, I made a video of that. I stopped whatever I have done, and I made a video. When we break here, you go long, heavy. And the reason is, again, just a big, large macro falling wedge. Very precise. And we have the highs here. We tagged it there in 2020. We tagged it again in 2024. And then we broke, right? These are the pillars in my book of a breakout. And on top of that, we had some internal stuff as well going on where we had a bit of a, can you call it a head and shoulders here? It definitely checks many boxes, right? So anything north of 67, and that was the long call. Because when we are breaking that, we can use the lower trend line here as our exit plan. So if we are wrong, you get out, you sell, and you see what happens. And our target is, you can see here, we can do the extended fib, right? There to there to there. So the 100% measured move is 6, right? With overperformance getting to the other yellow, we're talking 11, which is the triangle high or the major macro high. So there was so many good things for SUP holding the. I'm still holding the entire position. Short term here, and this is also a good lesson, at least to show you how I view things once we get these. Sometimes you get these monthly breakouts, as we call it here. Bollinger Band. I love Bollinger Bands when I'm not recording because I think mm, they are probably disturbing more as a default when trying to show charts because as you can see here, what the hell is that blue thing for many people? However, this was a clear setup for a massive Bollinger expansion, meaning you're getting monthly candlesticks after a huge compression to huck the upper Bollinger Band. And typically, the first one here is the attempt. And then you get the second, that's the confirmation. And that is where you get the expansion to the lower side. So what is happening during that period is that these will huck the upper, which will be generated month per month. This one here will balloon the other side and then come join us. And once they start to, you know, getting close, that is when you get the next bigger pause. So you had a monthly breakout on the Bollinger Bands as well, meaning whatever happens on the daily now, we don't really care. We look at the weekly, but it is the monthly that is in control. And now you will have many people yell, yeah, but we're oversold on the daily, our RSI and all that. It doesn't matter. You can push that away because we are only worrying about the RSI on the monthly now. That is the main time frame that we're looking at because we will be oversold and with negative divergence for a long time on the daily, and people will misinterpret that. And that is why I say often that I think people are using RSI incorrectly. Well, they are using it correctly, but they are focusing on the wrong time frame often. So anyway, that was a bit of a step in the other direction. But let's see here what happened today. Again, it's the daily, so we don't really we're not focusing on it, but we did have that initially big surge, expanding volatility, closing at the highs today. If we can break that, by all means, we're going higher. We're going to roughly 1.5. So yeah, SUP monthly, one for the books in my view. Vista here, I think is a misstep because we didn't call it. So again, that is not one to look for. CDE has not broken. It looks good. And the reason is simple. Well, it has broken. That is incorrect because we have broken the 30-year trend line here. That is broken. Absolutely fantastic breakout. And then the next big one is the blue wedge here, which is the sideways out, and we have a bull flag there as well. Beautiful. Breakout. We tagged the blue right there to the tick. Boom, almost pulling back. If we break on the fourth here, again, roughly 9.5 to $10, you can go heavy long in CDE. Quite simply, we have a 30-year breakout with an internal wedge that is almost 10 years old. You're breaking those two, both of them within like a month or two, 3, yeah, basically within a quarter. You're breaking out two major ones, a 10-year and a 30-year. CDE is definitely up for grabs in my book here. CEF, which is a mix of gold and silver. So you have spot physical investing into gold and silver, whatever ratio they use, I have no idea. But again, we called it there. The big move, April 2024. We said this is the big breakout for gold and silver. And boy, were we right. And you can see here, roughly 20. We are now at 30, right? And you can see, again, triangle high. We tagged the triangle high, resistance. Only a teeny weeny pullback, and then you went again. Right, we could have easily done that, and then we go. But just to show you that triangle high is almost always the first bigger target that we have. Again, it looks incredible. And let's see how long this can continue before we get any sort of pullback. But you can note the 30-year, from a timing point of view, could it be that the next leg up, ends in 2027, where we have had yet another 200%? Maybe. But definitely big call there saying, hey, silver and gold, mostly gold at that point in time, is entering a whole new beast of a bull market. Incredible. incredible. Here we have DRD, which also is a stock that ticks a lot of my boxes when it comes to entry. You can see here, right here at roughly 7. This was during COVID, by the way. You had an entry at roughly 7. You rallied to 18, all happy days, and then you pulled all the way back for a major, even more deep retest at roughly 4.6, down 75%. That is not funny. However, what was created after is actually quite nice because you can start to frame the squeeze pattern, which we love to take. Textbook, 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 squeeze after a breakout. This one here. And then you get a little bit of a dip where you don't touch the lowest point. You can do, but the most bullish is you do not touch the lower side after the third touch. And then you go. We rallied again, first target, triangle high. We hit that, pulling back. If we start to break here again, roughly 4, we can do shorter time frame stuff here. Once we start, excuse me. You can see the big break here, initial rally. Once we start to break this structure here, whatever we are getting, maybe that weekly is better, I don't know. We have to do that. Excuse me, guys, excuse me. Once we start to break whatever here above the golden again, roughly 14.5, then you go again. DRD looks incredible. SVM hasn't broken out, but it's also one of them where I think if we're looking back 1 year from now, at least when we break 1 year, it's going to look similar to, SUP, maybe Radisson and all these guys. And it's because we have a similar one, boom, boom, right? And then you're getting to here, we don't touch, and then we break, and then we go. So anything north, again, this is a setup for you that you can take. Anything north of like $5 in this one here, then we rally initially to roughly 6.5, 6.3, excuse me. And then some sort of pullback here on the third touch, and then you get the big fourth. And then we target the yellow. Wow, $30. You are at 4 now. So again, max greed target is the upper yellow, meaning if we are lucky enough to get to there, you shouldn't, as a default, have a position anymore at that point because you are selling, right? Because you are selling it. So this was the entire walkthrough. I hope you enjoyed this. Again, join me on the Substack to see more of this. Become a subscriber, see if this is something for you. And hopefully, again, you and I together can do our very best to navigate the commodity space and make the most of it, because there is definitely money to be made. No question about that. So it's been a pleasure, long video. I hope you enjoyed this day, guys. Have an amazing evening. Cheers and bye.